The cryptocurrency market has seen a steep correction to retest the critical level of support at 60,000. Will Bitcoin bounce from this level, or are we going to see an extended correction? At what point does the macro trend end, and how are the short-term charts developing? These are questions we're answering in today's video. Let's dive on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the macro price action, the short-term price action, and everything in between, going over the recent correction, the implications of the last 48 hours of downward price action, the macro invalidations, the high time frame structures, and so much more. By the end of today's video, you have a detailed and well-rounded understanding of not only the short-term, but the macro charts as well. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you were interested in taking your trading to the next level, you can join us in the VIP channel. If you were interested, you can go ahead and contact me in the pinned comment of the free channel by clicking my name, or find our trading results via our trading track record link, and even a video showing you exactly what VIP is about, showing you inside the channel and everything you need to know about what you get access to and the perks of being a VIP member. You can join over nearly 700 members in the VIP channel now. By getting access to that, you'll get access to trading setups with exact entries, exact targets, exact stop losses, and everything you need by clicking that information. Let's go ahead, guys, and jump on in, starting with the short term. So very briefly, guys, we have seen an incredibly brutal week for not only cryptocurrency, but mainly for traditional assets. We saw one of the most violent days in the traditional asset market since the COVID crash in 2020. To put it in perspective, that was by far and large one of the most, devastating days we've seen for the market for, it was around 14 years, I believe. So a very, very long time. So one of the worst days we've seen in the markets for a very long time. And although Bitcoin didn't get hammered down all that much, the altcoin market took an absolute flogging. We can see over here on the total 3 just how much that altcoin market dropped from around 610 billion down to 560 billion. But I think with these corrections, people get very emotional, fear takes hold, and that drives the price action further down. But sometimes it is good to take a step backwards and really review what has actually happened on the short term. What is the damage of this correction, and what significance does this correction really have? Has it really changed the macro expectations? These are things we're answering in the video today. But momentarily going over the short term, or should I say briefly on the short term, we did see Bitcoin break below that critical level of support at 63,000. We saw the breakdown, and we actually saw the price action correct into that $60,000 region, exactly hitting that prior change of character level right over here. If you watched our video before last, we talked about the possibility of, if we were to see a breakdown of 63,000, we would see a correction, you can see on the left, to that change of character level, which we have seen exactly play out, and we actually touched this level to the exact dollar. So if you caught that correction, if you shorted that breakdown, congratulations. This is where we've gone ahead and closed out those positions. Let's go ahead, guys, and jump into the market data. We'll come back to Bitcoin in a moment. Looking at the overall data over here, the 24-hour volume is down 23%, sitting at 132 billion. And 24-hour liquidations are down 6.9% at 251 million. Still a massive amount in liquidations, with 211 coming from longs and 40 million coming from shorts. Taking a look at the DXY, the DXY has officially corrected to our short-term bearish target of 103. This was the short-term support we were being discussing that for quite some time now. And again, if we do break below this level, we're going to see a continuation to our sell side liquidity. Until then, this is an area of support. We could potentially see a bounce from it. Overall, we are expecting the DXY to continue toward the downside. The S&P 500 has retraced back to its weekly high at 5,300. And we've been discussing this for quite some time as well, talking about the significance of this level and why 5,300 will need to hold as an area of support. If we fail to hold above 5,300, that will mark the official start of a high time frame downtrend for the S&P 500. Now, I can't stress how significant that is. We haven't been in a high time frame downtrend for S&P since we broke out in January 2023. So if we were to break below this prior high, that will be the initiation or the starting point of a new high time frame downtrend, and that could potentially result in some extended corrections. I will say, while 5,300 is able to hold a support, this is an area of support where bounces could originate from, and we could see continuations upward again. For us to get confirmation for that move to 6,000, we are going to have to break past that prior high at 5,700. That is it, guys. Let's go ahead and jump into Bitcoin. So today we're going to be discussing in detail the short-term price action, the bullish and bearish expectations, exactly what is happening, the macro charts on the daily, what has changed, what are we watching out for, and what you should be paying attention to, and of course the bearish validation points. At what point do the bears definitively have macro control over Bitcoin and the bulls lose hope? This is the main topic of today's video. Let's jump in. A quick word from today's video sponsor before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on into it, and we're going to start off on the daily, then move to the short term, then move back to the daily, and then move to those macro charts. So as we can see, Bitcoin has had a not very good week. We've seen Bitcoin reject from that $70,000 resistance, and we've pushed back slowly and steadily back under our horizontal support levels at 63,000, a critical short-term support, resulting in a move back below the mid-level, which is the dash trend line, and the 200 SMA to retest that psychological level of support at 60,000. Now, 60,000, as well as being a psychological level, it does have some horizontal significance. If we do look back to our chart over here, in fact, the $60,000 level held as a temporary support for Bitcoin for quite a fair amount of time. We had two major liquidity grabs below. Our first liquidity grab being on the 24th of May, and our second drop below being that extended correction around June, July. And we did see the price action drop under there for quite an extended period of time, eventually reclaiming that level. So 60,000 being that of a horizontal level, it was also, again, a psychological level, being those whole numbers. And if we look at the weekly chart momentarily, you can see just why 60,000 is so important. So if we do drag this horizontal box out, $60,000 is going to be the prior weekly high of the prior cycle. Now, this was, of course, our cycle top. This is the highest price that Bitcoin reached. And this, of course, was going to be the pi cycle high. So this is when the pi cycle indicator suggested that we had a macro top, and that was the weekly high. So that first weekly high we had before a massive 45% correction, before that second leg up into deviation and eventual, the start of the bear market. This weekly high is still an area of massive significance. We can drag this across and we can see that we had that weekly deviation under, we were able to reclaim, and when we reclaimed, we pushed back up. We are now retesting this level as a support. So we know that on the macro chart, that 60,000 is not only a major level of horizontal support, but it is a psychological support as well. So although we are underneath the dotted trend line, we are now retesting an area of short-term support and macro support, which could facilitate a bounce and continuation back above. So to summarize that in layman's terms, if we were to see any point in the price action between the dotted trend line and the range low that could facilitate a rebound in price action, this area is going to be the most likely area of which that reversal develops from. In other words, if we fail to reverse from this $60,000 region, it is highly likely Bitcoin is going to continue to retrace into this lower pocket of liquidity between 56.6 and 53,000. So now we're going to jump to the short term, and then we'll come back to the daily charts to really talk more about this bounce. What we can see here, and if I go ahead and draw that $60,000 support in, let's go ahead and pop that one in, and we can see it starts from that change of character level and it extends slightly upwards to around about this region. You can see Bitcoin has been able to come down, and we broke down from the support, and we retested that change of character level. We, again, are retesting this area, the $60,000 area, as an area of support. We can also see on the VRPV that below 60,000, we do have a small gap in the VRPV, which could immediately drop us down to this 58 to $59,000 region. So we are watching for liquidity grabs into that $59,000 region for worst case scenario. But what we can see here is that Bitcoin has developed somewhat of a descending channel formation along the last couple hours as we have been dropping below 63, and of course along the last couple days as Bitcoin has been developing this overall downtrend. And the important thing about this channel is that it identifies very clearly where our bullish trigger is. And our bullish trigger is going to simply be the downtrending diagonal resistance of this descending channel. So we have our point number one, we have our point number two, and we're going to extend point number two across, and that will eventually meet our point number three. And therefore, if we are able to break above this downtrending diagonal trend line, at that point, that is when that reversal really starts to develop, and the likelihood we break back above the dotted trend line really comes into play. So for Bitcoin to see the break above the dotted trend line, and we know the consequence of breaking these trend lines. Generally, when we break these trend lines, we do see swings to range highs or range lows. So while we're under this trend line, there is a pretty, dangerous possibility we do see a continuation downwards, besides the fact we are at support now. So that's why we said before, if we were to lose the support, it is highly likely we see an extended continuation downwards. But if we're able to sustain in this support level, this is kind of going to be the level that could facilitate a bounce over that dotted trend line again. So we're looking at this short term. We are watching this downtrend. If we break through this downtrend, it is likely Bitcoin is going to be able to climb back through that dotted trend line, back through that $60,000 support, and this will be marked as nothing more than a massive flush out before a continuation higher. And again, guys, if we are breaking this chart even down even further, what we can see here is we do have that respective RSI downtrend. These peaks on the RSI lining up with the peaks on the price action. So we are watching for a break of the RSI to indicate a possible continuation to retest this downtrending trend line. Again, so again, if we break through our RSI, there's a pretty good chance we're going to see a retest of that downtrend, and we need to break that downtrend to see a continuation higher. Furthermore, what we can see is our midline of the channel. While we remain under the midline, it is likely we continue to chop downwards. If we break through the midline, we are going to see continuations to the downtrending diagonal resistance. As we said just moments ago, we do have a liquidity pocket between 60,000 and 59,000. We can see it over here again, which indicates we could still see one little more leg toward the downside to come back down and retest this area before we see that continuation higher. So I'd also be very cautious about that. All in all, guys, the price action is inevitably in a downtrend. We are in a downtrend. There's nothing you can really say about that. We are not looking fantastic. We are underneath the midline. We are pushing into the 60,000 region. We failed to break 70,000. We are underneath the 200 SMA. However, this price action is not considered abnormal. As we have been saying this entire time, while Bitcoin remains within the confines of the descending channel formation, swings to the high side and low side should be considered normal price action. The only major concern people really have now, I'm not concerned about Bitcoin, is that altcoins continue to bleed significantly on every swing Bitcoin takes, because Bitcoin dominance is continuing to push aggressively higher. If we look at Bitcoin dominance at the start of March, we were around 52% when this channel really peaked at the top. Bitcoin dominance is now 4% higher, and Bitcoin is more or less within the same price range. It is showing us that during this period of downward consolidation, altcoins have been losing massive amounts on their market cap. They've been weakening significantly in comparison to Bitcoin. So we'll summarize everything, then we'll jump into the macro charts. Bitcoin is retesting a major weekly level of support. This is a support level at 60,000. The 60,000 support level historically has acted as a major point of reversal for Bitcoin on this within the consolidation of the last 5 months. Therefore, if we are going to see Bitcoin rebound and we are going to see Bitcoin reclaim the dotted trend line and thus continuing back to the range high, the $60,000 region, the region of which we are retesting now, is the most probable region of which that reversal could develop from. If we fail to do so, it is highly likely Bitcoin is going to retest the range low of the descending channel formation. That is that, guys. Let's talk about the descending channel. If we retest the range low of the descending channel formation, technically Bitcoin is still within the confines of the descending channel formation, and the expected break toward the upside eventually is still possible, meaning that this is still a bullish structure. Regardless of what happens between the range high and the range low, only a breakdown of the range low and a breakdown of the range high will have significant macro implications on the expected directional continuations of Bitcoin over the coming months. Saying again, only a break of the range high and range low would have macro significance. Everything else is short term, and the reason we care a little bit about this is because, again, Bitcoin dominance continues upwards and altcoins continue to bleed. In saying that, if Bitcoin breaks the downtrend, we continue massively higher. If Bitcoin breaks the downtrending support level, we continue massively lower. It is literally as simple as that. Anything between is just sideways consolidation. It is macro consolidation, but it is just sideways consolidation. So let's now talk about the validations of bullish continuations and the invalidations of the bullish scenario. So the bullish scenario is still more likely as a consequence of the overall structure being a bullish continuation pattern. This is the descending channel formation. Descending channel formations are bullish continuation patterns, and statistically, there is a greater probability we see break toward the upside because we saw a directional continuation into the consolidation than it is that we see a break toward the downside when we look at these patterns. Okay, there's a statistical probability of around 70%. It is more likely we see a break up than it is a break down. That doesn't mean we can't see a breakdown, it is just the least likely scenario. So the overall narrative is still, eventually Bitcoin is going to break through the 70k resistance or this downtrending resistance, and that will perpetuate the continuation toward the upside into the 80,000, into the $85,000 region. That is the expectation. Okay, let's talk about the bearish validation point. So at what point does that expectation no longer become valid? At what point are the bears definitively in control of the price action? Moving to the macro chart. For the bears to 100% take control of the price action, and by taking control, we mean invalidating the bullish continuation pattern and validating a directional continuation downward into the next support, again breaking below the breaking the overall market pattern we've been in for the last 5 months toward the downside. That will be the bearish point. So at what point does that happen? Again, if we see a breakdown of the leading span B, which is the red line on the Ichimoku cloud, that would suggest for the first time, okay, since we broke above the leading span B, which was over here, okay, January 2023, the exact time the S&P 500 broke this downtrend, that would be the first time since January 2023 that we have seen a trend revert, meaning we have seen the trend move from an uptrend into a downtrend. At that point, we would see the macro downtrend for Bitcoin officially begin. And at that point, we would also see the invalidation of the descending channel formation and a macro downtrend initiate. So the exact point of which the leading span B lines up with is going to be pretty much exactly, let's just go ahead and show you here, guys. While we're talking about it, let's just show you, let's just bring up the Ichimoku cloud. It lines up almost perfectly with that downtrend. You can see it right over here. Look where that leading span B is right over here. It lines up in that lower pocket almost perfectly with the downtrend. Thus, a break of the leading span B will massively increase the likelihood of a break downwards below this downtrend and invalidate this descending channel structure. This would be incredibly bearish because, again, historically, we have not broken through the leading span since January 2023. This was the start of the uptrend, and if we break below it, this will be the start of the macro downtrend. Historically, every time we break below the leading span B from the top side down, we see a 15 to 71% correction in the price action. That is, again, a macro downtrend. So we are watching out for that. Now, this does say one more thing before we end the video. Because we have that little bit of a gap between the downtrend and the leading span B on this chart, it goes ahead and tells me one thing. It is unlikely we are going to see a retest of the downtrend again unless we break below the leading span B, okay? Which means there's a good probability that what we are doing here is creating a lower high in the price action. Incorrect. A higher low in the price action before we see that continuation higher. I'm going to leave the video there, guys. Thank you for tuning in. Have a fantastic weekend. Sometimes it is good to zoom out, and everyone is in different positions. Everyone has different risk tolerance. Everyone purchased at different times. You need to ask yourself, at what point are my invalidations? At what point is there enough data to suggest the market is not going up for me and I'm going to sell my positions? That is a question you need to ask. For me personally, I wait for macro triggers. I am waiting for the macro trend to flip bearish. We are seeing weakness, we are seeing exhaustion, but weakness and exhaustion is not an indication of the trend officially flipping. This entire time, I have to wait for the macro trend to start or to end and the macro downtrend to begin for me to even consider selling the positions I bought all the way down over here. It'd be absolutely insane for me to sell my positions that I bought over here just because of a small pullback when we haven't officially entered a macro downtrend. That is what I think. This is my opinion. This is based on my risk tolerance and my positioning. Again, everyone is going to be slightly different. You have to find what works for you, and you have to decide based on the relevant data and the data you have available how you're going to go ahead and act. Thanks for tuning in. Catch you guys in the video tomorrow. See you then.